Welcome to Evolvent, the probability brief, your twice-weekly signal check on the world's most telling prediction markets. I'm your host, and today is Tuesday, February 10th, 2026. This episode brings a fresh set of market movements that have taken shape over the past 72 hours, and several of them reveal how quickly sentiment can shift when politics, technology, and public perception collide. As always, this show stands on its own, independent in tone and structure, but when a major early indicator's theme overlaps with a major market move, it's worth acknowledging the shared terrain. Today's briefing includes one of those moments. We begin with the market that has dominated attention this week, the 2026 U.S. presidential election. Over the weekend, the probability landscape shifted again, but this time the movement wasn't driven by economic data or a viral clip. Instead, the catalyst was a series of coordinated endorsements from several high-visibility governors and mayors, paired with a fundraising surge that exceeded expectations. As of this morning, the incumbent's probability sits at 63%, up from 57% late last week. What's notable is the nature of the shift. This wasn't a sudden spike tied to a single headline. It was a steady climb over 3 days, suggesting that traders are responding to a broader sense of organizational momentum rather than a single news cycle. The market appears to be pricing in the idea that the campaign has found a rhythm, and that rhythm is resonating with donors and political insiders. At the same time, the challenger's probability has not collapsed. It has dipped only slightly, from 41% to 37%. This indicates that traders still see a competitive race, but they are adjusting expectations around the incumbent's operational strength. One interesting detail is that the market's implied volatility has increased, meaning traders expect sharper swings ahead. That aligns with what we've seen in past cycles. When endorsements cluster and fundraising accelerates, the market often anticipates countermoves, opposition messaging, or unexpected events that could rebalance the field. For listeners who follow early indicators, this echoes a theme from last month's episode on political coalition dynamics. When institutional actors move in unison, markets tend to follow. Now let's turn to our Whale Watch segment, where a major move in the digital infrastructure space caught traders off guard. Late Sunday night, a single wallet placed $480,000 into the National Data Privacy Framework passed by Q4 Market. Before the trade, the yes side sat at 29%. After the trade, it jumped to 46%. This is a dramatic shift for a market that had been stagnant for weeks. What makes this move especially interesting is the timing. Over the past month, several tech companies have been lobbying for a unified federal standard to replace the patchwork of state-level privacy laws. But until now, there was little indication that Congress was prepared to act. The whale's position suggests that someone believes negotiations are further along than public reporting indicates. This wallet has a mixed track record. It correctly anticipated last year's broadband subsidy extension, but it missed badly on a major antitrust case. That inconsistency makes the move harder to interpret, but the size of the position alone is enough to draw attention. Traders have already begun to reposition, and liquidity in the market has nearly doubled since the trade. Whether the whale is early, informed, or simply bold remains to be seen, but the market is clearly taking the signal seriously. Next, we move to the mispriced market of the week, and this one sits at the intersection of technology, public sentiment, and regulatory pressure. The market in question is National Autonomous Vehicle Safety Mandate issued by year-end, currently priced at just 14%. That number seems low given the recent uptick in high-profile incidents involving autonomous vehicles in several major cities. Over the past 2 weeks, 3 separate investigations have been launched into software failures, emergency response delays, and sensor miscalibration. While none of these incidents resulted in major injuries, they have generated significant public scrutiny and renewed calls for federal oversight. What makes this market particularly intriguing is the political context. Several senators have already signaled interest in a national safety framework, and a bipartisan working group has been quietly meeting since December. Despite this, the market remains skeptical, likely because federal action on emerging technology often moves slowly. But the combination of public pressure, media attention, and early legislative groundwork suggests that the probability may be undervalued. If even a preliminary mandate or guidance document is issued, the market would resolve yes. For traders who follow regulatory momentum, this is one to watch closely. Before we close, it's worth noting a smaller but meaningful shift in the major weather disaster relief package passed by Q3 market. The probability has risen from 32% to 39% following a series of severe storms across the southeast. While this market isn't our main focus today, it's a reminder that environmental volatility continues to shape legislative priorities. Early indicators listeners may recall last week's episode on climate-driven infrastructure stress, and here we see a real-time example of how those structural pressures translate into market expectations. To recap today's briefing, the presidential election market is responding to coordinated political momentum rather than a single news event. A whale has made a bold move in the national data privacy market, signaling potential legislative progress. The autonomous vehicle safety mandate market appears undervalued given recent incidents and political interest, and environmental volatility is nudging disaster relief expectations upward. Across all of these markets, the common thread is that traders are responding to clusters of signals rather than isolated headlines. That pattern is becoming more pronounced as we move deeper into the election year. Thank you for listening to Evolvent, the probability brief. If you found today's episode insightful, please like, subscribe, follow, and share. Your support helps this show reach more listeners who care about how the world's most important events are being priced in real time. You can also listen to the probability brief on Spotify and YouTube, alongside Early Indicators Brief, which continues to explore the deeper structural forces shaping global systems. Sources for today's episode include PolyMarket, public campaign finance disclosures, congressional committee activity logs, transportation safety reports, and National Weather Service summaries. This podcast is for informational purposes only and does not constitute financial, investment, or betting advice. Market probabilities change rapidly, and listeners should conduct their own research before making decisions.